The semiconductor market is shaking, and the charts are moving fast. First up, we have to talk about Mizuho, who just dropped a bombshell by downgrading NXP Semiconductors from outperform to underperform. They have slashed their price target from $255 down to $188, leaving investors scrambling to understand what this means for the company's future trajectory.
Tired of dropping your phone or struggling to prop it up? Meet the Pop Sockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Next, all eyes are on the absolute titan of the industry, Taiwan Semiconductor Manufacturing Company. Despite the market volatility, TSM is proving to be a massive winner in the AI race, with recent earnings that show just how dominant their pricing power really is. Investors are dissecting every word from their latest report to see if this growth trend is truly sustainable. The conversation around AI is only getting louder as we look at the bigger picture. From Elon Musk predicting a future of 10 billion humanoid robots to tech giants like Amazon betting their entire destiny on generative AI, the ecosystem is shifting beneath our feet. We are diving into how these massive breakthroughs are creating a multi-trillion-dollar wave that is reshaping the global economy. Finally, we are breaking down why Taiwan Semiconductor shares took a tumble despite posting stellar first-quarter results. While profit-taking hit the stock, CEO C.C. Wei is addressing critical concerns about production and geopolitical supply chain risks that have everyone watching closely. Want to stay ahead of these market moves and never miss an update on the tech that matters? Make sure to hit that like button, subscribe to the channel, and ring the bell for notifications. Ever feel like the market is throwing you a curveball when you least expect it? Well, NXP Semiconductors just took a serious hit. Mizuho officially downgraded the stock from outperform to underperform, and they didn't just stop there. They slashed the price target from a hefty $255 all the way down to $188. That is a massive adjustment that speaks volumes about how analysts are recalibrating their expectations for the chip sector in this volatile climate. When a major player like Mizuho makes such a dramatic shift, it is usually a signal to pay close attention to the underlying headwinds facing semi-cap stocks right now. It forces us to ask, is this just a momentary cooling off, or are we witnessing the beginning of a larger trend of dampened growth for the industry? If you are holding NXP, this is definitely the moment to reevaluate your thesis. Make sure you hit that subscribe button if you want to stay ahead of these market-moving shifts, and remember, in the world of investing, it is not just about catching the wave. It is about knowing exactly when the tide is starting to turn. Ever wonder who is actually pulling the strings behind the AI revolution? It is not just the flashy software companies you hear about every day. It is the silent giant, Taiwan Semiconductor Manufacturing Company, better known as TSM. Fresh off their latest earnings report, TSM has just reminded the market why they are the undisputed king of the chip industry. They posted numbers that were nothing short of stellar, and honestly, it is starting to look like they are in a league of their own. What makes TSM so fascinating is their incredible execution. They are literally the backbone for the world's most advanced AI hardware. When you have this much pricing power, and you are the primary manufacturer for the titans of tech, you aren't just participating in the market, you are shaping it. The momentum behind them is fueled by massive AI tailwinds that show no sign of slowing down anytime soon. Now, of course, keep in mind that I am just a voice here. This isn't professional investment advice, and you should always do your own deep dive before jumping into any position. Still, it is hard to ignore the dominance here. TSM is proof that in the high-stakes game of global tech, manufacturing capacity is the ultimate leverage. If you enjoyed this breakdown of the chip market's heavy hitter, make sure to hit that like button and subscribe for more deep dives into the stocks moving the needle. It is clear that while everyone else is chasing the hype, TSM is busy building the infrastructure that makes the future possible. What if I told you that the biggest wealth transfer in history isn't being driven by software, but by a physical transformation of our reality? When Jeff Bezos hinted at a technology that would define Amazon's future, Wall Street barely blinked. Now, CEO Andy Jassy calls generative AI a once-in-a-lifetime shift. But hold onto your seat, because Elon Musk just raised the stakes even higher. At the Future Investment Initiative, he predicted 10 billion humanoid robots by 2040. Do the math. That is a $250 trillion market. That is not just a trend. It is a total reconstruction of the global economy. Now, you might be thinking, how is that even possible? The secret isn't just in the code. It's in the hardware that allows AI to exist. While everyone is fighting over NVIDIA, a much quieter, under-owned company is building the infrastructure that makes this entire revolution possible. It is the gatekeeper of the AI era, and yet, most investors don't even have it on their radar. This is exactly why the smartest money in Silicon Valley and on Wall Street is moving fast. They know that once this technology hits peak adoption, the early bird isn't just getting the worm, they are capturing the entire industry. I've broken down the full story of this game-changing company, including the why and the how behind its proprietary tech, in an exclusive members-only report. For less than the price of a fast food meal, just $9.99 a month, you'll get our deep dive analysis on this stock, plus an entire year of our premium newsletter, monthly stock picks from our research director Dr. Anand Dogan, and even a 70-page quarterly report worth $149 alone. We are talking about professional-grade intelligence meant to keep you ahead of the crowd, ad-free and backed by an ironclad 30-day money-back guarantee. There are only 1,000 spots available for this offer, and once the secret is fully out, the opportunity for this kind of asymmetric upside will be gone. Head over to our website, secure your subscription, and position yourself before the rest of the world wakes up. After all, in a market moving this fast, you are either the one reading the report or the one reading about it in the rearview mirror. Ever feel like the market is playing a twisted game of good news, bad vibes? That is exactly what happened to TSMC investors this week. On paper, Taiwan Semiconductor just delivered an absolute masterclass of a first quarter, yet shares took a tumble. Why? Well, it is the classic buy the rumor, sell the news phenomenon, mixed with a healthy dose of geopolitical anxiety. Let's look at the numbers because they are genuinely impressive. Revenue hit a staggering $134 trillion, and their gross margin of 66.2% blew past their own internal forecasts. Earnings per share, they beat Wall Street expectations by 7%. Usually, that kind of performance sends a stock to the moon, but investors are clearly taking some profits after a massive rally that pushed the stock to record highs earlier this week. It is a reminder that in this market, perfection is often already priced in. But here is where the story gets more interesting than just a price correction. Management gave us a glimpse into the future, forecasting an 11% jump in revenue for the next quarter. That is nearly double the usual seasonal growth. Why the optimism? It is all about the AI gold rush. The demand for cutting-edge processors in data centers is not just cooling, it is heating up. However, it is not all sunshine and silicon. The company dropped a warning about supply chain headaches involving specialized materials like helium and bromine. Thanks to rising tensions in the Middle East, shipping routes are being disrupted, causing some production hiccups. TSMC says they have found backup suppliers, but in a world where manufacturing precision is everything, uncertainty is a dirty word. Analysts naturally jumped on the call to ask CEO C.C. Wei if these supply constraints might drive clients toward competitors. Wei didn't mince words. He basically said that anyone trying to replicate TSMC's scale is looking at a 3-year uphill battle with massive capital costs. Basically, TSMC is holding all the cards for the foreseeable future. So, where does that leave us? NEDM is bullish, hiking their price target to $480, even while some valuation metrics suggest the stock might be running a bit hot compared to its historical P/E ratio. Yet, it is worth noting that insiders aren't selling. In fact, they have been buying. So, is this dip a warning sign or a buying opportunity? The fundamentals say TSMC is stronger than ever, but the world map says we should stay cautious. What do you think? Is the AI demand enough to overcome these global supply chain risks? Drop a comment below and let me know your take. And if you want to stay ahead of the curve on market-moving tech, make sure to hit that subscribe button and ring the bell. Remember, in this fast-paced market, the only thing more dangerous than missing a trend is not understanding why it's moving in the first place.